Hi guys and girls, welcome. My name's Adam and I'm the director at AJG Properties. Thank you so much for clicking on and coming to watch my video presentation today. So today I'm going to be talking about investing in property. So the purpose of this presentation is for me to be totally honest and transparent with you all watching, to give you an accurate understanding of what is currently happening within the property industry, regardless of your current experience. Then I hope to find like-minded individuals who are looking to invest in property and want to work alongside me to help solve people's property problems. So let's get started. There are many different ways somebody could invest their money looking for a high return on their investment. So these include, but aren't limited to, banks, ISAs and bonds, stocks and shares, other business investments, gold, oil and metals, crypto and speculative investments, and then of course property. Now, don't worry if you're unfamiliar with a lot of the terms that I've just mentioned, because today we're going to be talking specifically around investing in property. But before we start though, it's really important to note that with every investment strategy comes its own level of risk, and with that, its own level of benefits. Therefore, if you are risk adverse, you should probably close off the video right now. Excellent, you're still watching? So I take it you aren't against taking on a little bit of risk. It's also important to mention that with high risk comes high reward, and with low risk comes low rewards. So throughout the presentation, I'm going to explain how you can minimize these risks and maximize the return on your investment based on strategies that are best suited for you. So we're going to be outlining and covering the following topics. So what exactly property investing is, the different ways to invest in property and why you should choose property investing over other investment strategies out there, the benefits to invest in property, when the right time is to start, where to invest, and then how we do this, how we can invest in property. And then we'll end by looking at the current market analysis, and then we'll do a readiness check to see if you are ready to start your property investment journey. So what is property investing? Property investing is a successful and a very profitable investment strategy for your money. Why? Well, I'll come on to that a little bit later in the presentation. But before I mention the different ways that you can actually invest in property, there are a few factors to note. Firstly, you need to ensure that you are ready and fully committed to making an investment. Secondly, you need to ensure you are knowledgeable about all the possibilities to ensure you are choosing the right strategy for your goals and outcomes. Purchasing a property or multiple properties in the future is a significant commitment that needs to line up with your life goals and financial circumstances, both right now and in the future. If you're a first-time property investor watching, it's important to do your research and understand the what, where, when, why and how of property investing. But don't worry, I'll be covering all of this throughout the presentation. On screen, I have created an investing property framework to serve as a support and to act as a guide to help you structure or expand on your current portfolio. We'll be referring back to this framework a little bit towards the end, and hopefully it'll make a lot more sense to you then. So let's look at the different ways how you can invest in property. So the most common reason somebody chooses to invest in property is to acquire passive income streams to generate cash flow. And this is achieved through buy-to-let properties, HMOs, known as houses of multiple occupancy, service accommodation, and much more. More on each of these individual strategies later. However, another way people often invest in property is through a joint venture. This is where an arrangement between a minimum of two parties is formed to create value for an acquisition, development, or management of a property. An example of this would be you as an investor would invest your money for the purchase and refurbishment of a property to another property expert, such as myself at AJG Properties, who would negotiate the purchase price, the manage of the case progression, and the refurbishment to increase the value of the property, to then split the profits 50-50 after your initial investment has been returned. Finally, maybe you're somebody who's cash rich but really time poor, but you still want to receive an investment for your money. Or maybe you're someone who's heard of the benefits for investing in property but don't have the knowledge or experience to get started. Maybe you want a complete hands-off experience but a guaranteed return on your investment. If so, then angel investing might be for you. So this is where you loan your funds to a property investor, such as myself at AJG Properties, for a fixed period of time, typically between the 6, 9 and 12 months mark, with an agreed return on your investment. So to give you a real world example, Let's say I borrow £100,000 from you as an angel investor, and we agree that in 6 months' time I will pay you back £110,000, thus giving you a 10% return on your investment within only 6 months. Also, there will be security charges and contracts signed during every agreement to ensure that you'll always get your money back. If you'd like to discuss these options in more detail, then we can arrange a completely free, no obligation, online strategy call, and I'd be happy to support you in further detail. Right then, so we spoke about some of the different ways that you can invest in property, but let me answer a burning question that I know you have. Why invest in property over other investment strategies? Well, have you heard of the phrase as safe as houses? I'm going to assume you have. Essentially, this refers to the bricks and mortar being incredibly safe and sturdy, not only in a practical term, but also in a financial term as well. If you still need further proof, 60 people out of the 250 richest people on the Sunday Times Rich List in 2022 invest in property, with the third richest person being a property investor. Therefore, property still remains as a solid asset class in which to invest over the long term. Buying a property can be a huge step forward to achieving your financial security and growth, and is a great way to invest into your future, which is less volatile than other investment strategies such as equity and the stock market. Investing in property is really popular, as unlike other investment options, property investors have more control as they are purchasing or putting their money into a physical asset. Property prices have historically grown by 7.9% per year, which makes it a lot easier to gauge the estimated return on investment more accurately than other investment strategies out there. So now let's talk about some of the benefits to investing in property. So the first benefit is capital growth. This is where the value of the property increases over time just by holding on to the property. Investors use this growth in value by releasing equity to purchase another investment property, thus being able to recycle their money to continually purchase more properties, then creating more wealth and income streams which to reach their financial goals. Another common benefit is to achieve rental income, which is the money that you directly receive through letting the property out to a tenant. A good way to calculate whether a property has a strong rental income is by determining the yield. How we formulate yield is the annual rental income divided by the property purchase price times by 100. That will give you the annual rental yield. In order to determine the net rental yield, which is the money you net in your pocket after all expenses, that is the annual rental income minus your costs divided by your property purchase price times 100. That'll get you your net rental yield, which is what property investors use to determine whether a property has a good cash flow. Another benefit is the ability to take advantage of inflation. So I've mentioned this before to others in the past. It's completely blown their minds, so get ready. So, as we all know, inflation is eroding the value of our money in the bank, and yes, that also includes yours. Well, that same principle also applies to our debt. So what this means is, as long as the rate of inflation is higher or greater than the interest rate that we're currently paying for our debt, your debt is shrinking. Therefore, essentially, because of this shrinking effect, you're essentially getting paid to have that debt. I know, I did warn you, it's a lot to take in, mind blown, okay? And then finally, retirement plan. So property is often considered a better investment than pensions. And the reason for this is due to compound growth. Similar to the capital appreciation and capital growth we spoke about earlier, this means your property is increasing in value by a greater amount each year that you own it. The more the time passes, the higher the compound growth, meaning the greater amount of equity property investors can release to purchase further assets and repeat the process. So let's look at a real life example. Let's say you own a property which is worth £100,000, and using the 7.9% historic growth, that means after year one, your £100,000 property is now worth £107,900 just by owning it. This compounded together means in year two, your property is worth £116,000. In year three, your property is worth £126,000. In year four, your property is worth £135,000. In year five, your property is worth £146,000. In year six, your property is worth £158,000. Year 7, £170,000. Year 8, £184,000. Year 9, £198,000. And year 10, that first property that was worth £100,000 is now worth £213,902. That means in 10 years, your property has more than doubled in value. Yet not only in that time, you've been taking advantage of this growth by releasing equity to purchase further assets to protect yours and your family's future. Feel free to go ahead and do the maths. The great Warren Buffett once said, compound interest is the eighth wonder of the world. He who understands it, earns it. He who doesn't, pays it. And it's absolutely clear to see why. So now you might be thinking to yourself, well, Adam, that's great, but when should I now invest in property? Or you might be hearing news of a property crash, so surely now is not the right time to invest? Well, that's wrong. The news is going crazy about a property crash, with dooming headlines claiming 30 and 40% crashes. A lot of this is complete rubbish that the news sells to us, who we as consumers, we fall for it. So here's what's really happening. So the property market has taken a flip over the last few months, and it will continue to until it stabilises, that's for certain. Interest rates have always been forecasted to increase. However, we didn't expect this level of increase to be so sudden. This, combined with the government mislining their strategy with the Bank of England, is causing a huge impact on the financial market as a whole, not just within property. So what does that exactly mean for property investors and owners? Well, people who are coming off a 2 and 5 year fixed rates now have a decision to make. Do they fix on a higher new rate, or do they sell and downsize to more affordable repayments? Regardless of their choice, this means more properties will start to become available, and more people will be in need of a quick solution. As property investors, we have the opportunity to solve these issues and also benefit by purchasing properties in well sought after areas, which usually wouldn't be the case without large amounts of capital. And we can start to secure our own financial situations. So I know what you're thinking, you're still not sure, and don't worry, I was exactly the same. As someone who started in property through using a small amount of inheritance money I received for the passing of my dad, the level of risk and pressure I felt when making the decision was so high. But what did? I did my research, I invested into my education, and I threw myself in, and I've never looked back. So ultimately, there are two types of property investors: those who try to time the market and those who spend time in the market. As the saying goes, it's better to spend time in the market rather than trying to time it. If you spend too much time deliberating and procrastinating until the time is right, you'll end up wasting valuable time you could have spent benefiting from capital appreciation, compound growth, and cash flow. So to summarise, the property market has been hot in recent years, with the market favouring that of the seller. However, house prices are now levelling out, and this equalisation or correction is both positive for us as property investors and those who are looking to sell their house. My personal takeaway from this is a lot of people will be in difficult situations, and we can help. This is the only investment strategy that I know where not only can you benefit financially, but you can also help others out there in a difficult and stressful situation. And if you're anything like me, you'll take any opportunity to give a little bit back and support others in any capacity you possibly can. Because who knows, it might be us needing that helping hand one day. So let's look out for each other and work together. If this sounds like you, then let's get in touch. We can have a strategy call and we can discuss in further how we can work together. If you've listened this far, then you should now have a better understanding of what property investing is, the benefits attributed to investing in property, and when the right time to start is. Now you're probably wondering, well, where do I even invest? First, you need to decide on your strategy. If you're unsure, this is something I can help you with. So, start to ask yourself, do you want to be actively involved in the finding, negotiating, refurbishment and managing of the deal? Or do you want to be completely hands-free? Once you've decided that, you need to find an expert to work with, whether that's me or somebody else within the industry, as they can help you match properties to your strategy in the right area for success. Understanding your location is vital because each area will benefit from a different strategy. So just to give you a quick example, single-let homes in London do not usually produce a high return on investment. So to recap, deciding your involvement or your strategy, I would recommend working with an expert or somebody involved in the industry such as myself, but the choice is up to you. If you're going at it alone, learn your area, but if working with somebody, then share your criteria, what you're trying to achieve, and they can help match and find properties that suit your goals. If you're planning on being completely hands-free or just an angel investor, then partner with somebody who you like and start to create a positive working relationship with them. So, as promised, I mentioned we'll come back to it, so let's move on to how you invest in property. Simply put, property investing comes in two ways. You buy an investment property and you keep it or rent it out, or you buy an investment property and you sell it, often known as a flip. There are many ways to purchase a property and different types of strategies property investors utilize, but which should you use? I'm going to break down the 6 on screen in a little bit more detail right now. So the first one is buy to let. Most beginners start with this strategy as you have the best mortgage availability. It's a great way to begin your property investment journey. A couple of benefits through a buy to let property are you're collecting monthly rent from your tenant, and you're also taking advantage and benefiting from capital growth. Next, we have houses of multiple occupancy, otherwise referred to as HMOs. So this is where a house is occupied by multiple people from different families living together. The property is then rented out room by room. A benefit to this strategy is higher cash flow, typically more than double that of single lets. Moving on, we have serviced accommodation, abbreviated commonly to SA. So, serviced accommodation, otherwise referred to as holiday lets, are an alternative to hotels. And with the rise of Airbnbs, there's a huge demand for serviced accommodations right now. So the benefits of these are high cash flow with only short-term guests, and it's a little bit more tax efficient. Next, we have buy to sell, or referred to as flips. It's another very common strategy within the property industry. This is where you purchase a property at a low price with the purpose to add value and then sell it to make a profit. So this is great for generating large amounts of cash, and there's absolutely no tenants that you'd need to manage. Next, we have rent to rent. So this is a strategy used quite commonly in the commercial property. So for example, an owner of a giant warehouse may have a company to lease out to tenants. Within the residential properties, once agreed with the landlord, the same can be applied. So for example, you may agree with a landlord that you'll cover their payments and a little bit on top, and then rent out the property to other tenants. This strategy is often paired with other strategies such as HMOs and serviced accommodations. So a positive for this strategy is there is less capital needed upfront to start. Next, we're going to move on to lease option agreements. So a lease option means you're going to take control of a property and have the option to buy it within X number of years. So for example, I negotiate to buy a property at £100,000 today, but I will pay the full amount in 7 years if I exercise the option to buy. This is powerful as you're simply taking control with the option to buy and not the obligation. Therefore, come the end of the lease option agreement, if the property has significantly grown and is now worth £150,000, as an example, I can purchase for the original agreed price of £100,000. In order to make this work, you need to ensure that you have solicitors representing the both of you, and that agreement is lined out and it's signed by both parties. So it's a great way to generate equity at the end of a purchase lease option. So every investor is different. We each have different levels of capital and different risks that we're willing to take. So it's really important to note that every strategy does come with risk. So what I've done is I've created a more in-depth guide on each of these strategies. So if you'd like to see a copy, then please send me an email at adam@ajgproperties.co.uk and I'll be happy to share them. Okay, so let's take a look at the market right now. So it's really important to analyse the state of the market and discuss what property investors are currently doing right now. As we enter 2023, the housing market will continue to be impacted by the wider economic environment, with house prices forecasted to fall around 8% over the course of the year. That is a quote directly from Kim Kynard, the director at Halifax Mortgages. Whilst this statement may be concerning for homeowners and better news for buyers, it's worth noting that this would see average cost of property return to April 2021 levels, which is still significantly above pre-pandemic levels. 2022 saw rapid house price growth in the first half of the year, followed by a plateau in the summer, with prices then falling from September. Average house prices fell by 1.5%, and this impact of cost of living pressures and rising rates continue to affect household finances and demand. But what does all this actually mean? To put the current situation into perspective, the Halifax House Price Index, which is where the data is gathered from, was established 40 years ago, when the average house price was £26,188, and the bank base rate was sitting at 11%. Since then, average house prices have grown by 974% to just short of 300,000, and the bank base rate now sits at 4%, with the rate expected to rise between 4.5% and 5% by Q2 and Q3 respectively. Despite the uncertainty caused by interest rates rising and high inflation, there are signs buyers are still looking to move. Rightmove reports views of homes for sale were up by 11% in December 2022. With more stability in the financial market in the past few months, there's been an increase in the number of mortgage deals that are now available. Many mortgage lenders have already factored in these high interest rates, meaning there are now more options to choose from. So, what are property investors doing right now? Property investors are stress testing their figures based on the current climate. This has always been the case to ensure that we continue to receive a high return on our investment. So, interest rates are currently being stress tested at 6%. As a rule of thumb, you can typically stress test between 1 and 1.5% higher than the current base rate. Capital growth is now being forecasted at a 4% yearly growth. This is a 3.9% reduction on historic growth. However, it's still a higher return on your money than leaving it in the bank to shrink over time. Yet at that same time, banks are still lending money out to property investors and investing in property themselves. So to summarise, in recent years, the property market has favoured the seller, with house prices being sold for far more than they're actually worth. This is due to stock versus demand. The demand for property has always been high. However, with a housing shortage, this has resulted in people paying over the odds. What we're seeing now is a change as the supply of properties increases, as many people are now needing to sell due to high repayments, negative equity, and so on. And there are less people actively looking to move due to higher interest rates or lacking the ability to upscale to bigger homes. This causes an equalisation or a levelling, whereby buyers now have more choice and don't have to pay over the odds to purchase, and sellers still have the opportunity to receive an appropriate price for what their property is worth. I see this as a win-win. So, who am I and why have I left the introduction to this point? So, the reason is, let's be honest, nobody gives a shit until you actually give them something of value. Whether you're brand new into property or already have experience within property, the fact that you've made it to this point means that you may have learned something or you might have resonated with me as a person, and that's amazing. So, who am I? Like I said, my name's Adam. I'm the director at AJG Properties, and I'm a football coach by trade with a huge passion for supporting the growth of female football, especially within England. I worked with a variety of age groups, developing players to represent England national teams at various age group levels. I also project lead and manage community programs for children and young people with special educational needs and disabilities. But why is all this important? Well, it's important because regardless of your background, experience, age, whoever you are, you can get involved in property investing. Like I mentioned, maybe you stuck it out this far because there's something you like about me or you resonate with me. This is vital as you want to ensure, no matter the environment, that you are working with the right person, and the same goes for me. I'm looking to work with investors who share my passion of giving back and helping others by being the people's property problem solver. Therefore, if that sounds like you and you keep listening, then if not, thank you very much for listening so far, and I wish you all the best for your future endeavours. So, as a property investor, what we offer at AJG Properties is high rates of return, interesting propositions such as portfolio building and expanding, joint ventures, angel investing. You now know that your money is going into a safe asset class, and the same asset class, which is safe, is also an appreciating one, which means it increases over time. There's a variety of different options of how you can invest, and unlike investing or leaving your money in banks or with stocks and shares, you're speaking to the person who is in charge of your funds. Okay, so those are what we can offer people. So if that sounds interesting to you, then please let's get in touch. Let's have a phone call and see if we're right to work for each other. And there it is on screen, as I just mentioned. So if this is something that you're interested in, then my details are also on screen. You've got my email address and my phone number. Contact me and we can arrange your free, no obligation strategy call. Right, let's check your appropriateness and let's ensure that you are now ready to invest into property. So, as I mentioned, we would refer back to the investing in property framework that I've created. This framework highlights the actions needed to take to codify your property journey and success, giving you a clear mind on what to focus on to achieve your results. If you thought about investing in property looking for a get-rich-quick scheme, then unfortunately you've come to the wrong place. Get-rich-quick schemes, they just don't exist. Get-rich-slow and long-term generational wealth, however, they do exist. And this framework will support you to get there. So the first segment is personalised strategy and planning. This can be achieved by yourself or with the help of a property investor. However, do your research. If you have the cash but don't have the time, then AJG Properties can help you. If you're someone who has the time and needs some guidance and support, we can also help with that too. As I mentioned, let's arrange a free strategy call and get started. So the second section is your financial strategy. So what funds do you have available? What returns are you currently looking for? What is a long-term goal that you're looking to achieve? Once again, this can be discussed in more detail during a free, no obligation strategy call. Next is the property selection and acquisition itself. So this can range from your chosen area based on your specific criteria, the type of property that you want to invest in. Is it residential? Is it commercial? Is it houses? How many beds? 2 bed, 3 bed, 4 bed? Are you looking specifically at terraced houses? Are you looking at semi-detached, detached? Maybe you're interested in apartments, flats and bungalows, okay? And how will you source and secure these properties? Will you do it alone? Or will you partner with someone like myself to source on and off property market deals? And then finally, review your strategy. So what went well? What hasn't worked? And what are you going to do differently to start to benefit from all the benefits that you can get for investing in property? Following these sections will guarantee that you will achieve success. So let's make sure you're prepared. At this stage, we've covered a lot. So now what I need you to do is start to have a think about knowing your strategy. Are you going to look to cash flow? Are you wanting to joint venture? Are you looking for fixed returns? Following this, what I want you to start to do is to start to define your criteria. So again, what return on investment do you want to achieve? What gross yield are you targeting? And how much equity do you want to have within the property? Now we can move on to choosing your area. This will be based on your criteria, as areas may differ in the strategies that perform the best for those. And then finally, let's identify the funds that you have. Having an understanding of the minimum amount required to start in your area, and if you don't have that minimum amount, how can you use your active income, for example your job, to drive your passive income? But once again, please do not worry if a lot of the terms are a little bit confusing. I'm more than happy to discuss this further. As always, we can have a call. I'll do my best to answer any questions you have and put your confusion at ease a little bit, and then we can really start your property investing journey. Now, all this sounds absolutely amazing, and it really is. The harsh reality is, despite this, people still fail. I want to highlight some of the common mistakes people make in property so you don't have to. First, well, the number one is they never actually get started. Having a goal and a dream is great, but taking credible actions and being accountable for those actions is ultimately what will get you closer to any goal that you'll set yourself. Maybe you have limiting beliefs. Can I really do this? What if I fail? Remember, every master was once a disaster. And as discussed earlier in the presentation, every single investment strategy does come with some form of risks, and mistakes will be made in everything we do. Property is no different. However, there are actions that you can take to help minimize and mitigate these mistakes. So this leads me on to the next reason why people fail, is they fail to do the research. I have no doubt you won't make this mistake. You're here, you're listening to my presentation, you're wanting to learn and know more. But those who neglect to do the research Maybe they think they know it all already. Those are the ones who will get found out. Invest in yourself, whether that's a mentor or an educator. You don't go onto YouTube and expect to learn everything a doctor knows. The same principle applies here. Maybe you're someone who wants to be completely hands-off. That's fine. Just ensure that you work with somebody who you can trust, who's reliable, and who you like. So another reason why people fail is simply they're giving up too soon. This is due to the comparison metric. So all unhappiness and negative emotions is around expectation versus reality. So when your expectations are currently so high, but your reality is much lower, this leads to negativity, and you might start saying things such as, well, this doesn't work, it's a waste of my time, I can't do this, I'll never make it, and something similar. So to give you an example of this, let's say you're my employee, and for all your hard work, I say I'm going to give you and your partner a 1-week break away abroad. But when it comes to the end of the year, I give you a free spa day for you both instead. You're going to feel less appreciative and a little bit shit, okay? Whereas if I never gave you an expectation and it come to the end of the year and I give you the same spa day, you'd feel extremely grateful due to my gesture and a lot better for the work that you've done. And this is simply down to having no expectations. And then this leads on to my final reason, which is having unrealistic expectations. So people go out there and they compare themselves to other people's 10 years when they're still in their year 1. And what I mean by this is you may see others who are benefiting from property investing who've been working at this for a long, long time, and you want those kinds of benefits right now. Well, the realistic truth is that, well, that's just not a realistic expectation for right now. Okay, so you may have heard of Malcolm Gladwell's 10,000 hour rule, where to become an expert or a master within a field takes 10,000 hours worth of practice. Whether you believe in this rule or not, but it's fair to say you need to work hard and gain experience within any chosen field before you can start to expect to see success. Don't run before you can walk. Surround yourself with people of knowledge. Don't be sold lies by others trying to sell your dream. And finally, enjoy the journey to the destination. That's where you're going to spend most of your time. Okay, so hopefully by now you've had real good value throughout the presentation. But in order to ensure that the service I provide remains valuable, I've limited the amount of spaces for investors that I can work with. And spaces are going quick. So if you gain value from the presentation and maybe resonate with me and like me and share my passion to help others, then get in touch. I am looking to add 5 more like-minded investors to work alongside and support my aim of being the people's property problem solver by supporting others with their property problems, but also taking advantage of the benefits that naturally come with investing in property. Now, you know the value of what I do. Maybe you're a little bit unsure, but maybe you know 2 or 3 people who might be interested. Well, I also run a referral scheme, and if we end up making money together, then I will give you £500 for referring me to an investor that I add to my list and eventually go on and work with. Okay, so what do you need to do next? Step 1, book your strategy call today. This is approximately a 15 to 20 minute call. This is a chat just to get to know each other, an idea of what your goals are, your criteria, and what strategy would work best for you. This gives us both the opportunity to see if we're the type of person who are going to get along, and I can see if you're the type of person who shares my passion for helping others, and if you want to get involved and you're happy with the services that I'm providing for you. Okay, after that, step 2, so now we're both happy with the initial call, we're going to move forward by signing the non-disclosure and non-circumvention agreements. And then following this, we're required to see proof of ID, proof of funds, proof of address, and then complete an anti-money laundering check, which is carried out by a third party, and this stage is non-negotiable. Okay, step 3, at this stage you can sit back, relax, while I go out and find property deals which match your criteria. We'll have regular communication with yourselves throughout, and I can even support you with other property related questions, so feel free to ask us anything and I'll guarantee to do my best to get you the right answers. Okay, when we're successful in finding a property deal that matches your criteria, we'll present this to you, which is going to outline all the key information, which is a breakdown of the costs, which are easy to digest, research of the area and the long-term growth. Once you've completed your own due diligence and you're happy and satisfied, we'll then move forward to securing the property ready for completion. Step 4, the final stage of the process. Now that the deal has been agreed, we will work with our trusted solicitors to begin the process. Throughout this stage, we'll regularly communicate with you to keep you up to date with the case progression and answer any questions that you may have. And hopefully we can get this completed as smoothly and as quickly as possible. And then technically, step 5 is the last step. Upon completion, we're going to repeat the process, finding you more deals and continue to help other people with their property problems. So don't wait now, let's get started. Feel free to follow me on social media. My Facebook, LinkedIn and Instagram are all on screen. Again, you can DM me through there. I'm happy to answer any questions. And yeah, let's do this. Now let's talk about your investment. My details are on screen. My email, adam@ajgproperties.co.uk. Go send me an email. We can book in a call, or you can send me a message and give me a call. Happy either way. Let's not wait. Let's get the ball rolling. Thank you so much for watching until the end of my video. I really hope that you found this somewhat valuable. If you did, please leave a like and subscribe for more future content. And of course, let's get in touch and let's start your property investment journey. Thank you so much, guys.